This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil with Invest Like a Pro, and today we were going to give an update on the stock market. Now, I'm doing this Thursday at the close for Friday morning. Wanted to follow up on last week's video and touch on a couple things that we discussed. So, the spider as the proxy for the S&P. Last week I showed you this this chart, which has the 18-day in pink here, and then the blue line is the 18-week line, and this is the actual 18-week overlaid, and that's why it has sort of a stair-step look to it. And then the same with the monthly line, this yellow line, gold line, and then the quarterly line is down here in red. Now, what I had said last week was the fact that we had continued throughout the course of the past year to break the 18-day and find support at the 18-week. And notice all these times where we came back and held this line and bounced off of it, and the line kept rising until just over the last week or two, where we broke the 18-week line, and last week it started to roll over. We actually rallied up and failed at that line twice, and then came back down through. So what I was saying is that the most likely target for this move is the next 18, which was, somewhere in the low 410, 411, something like that. Well, on the gap down on the news today of the invasion of Ukraine, we had a big gap down, and the market opened up right at the 18-month line and has a pretty big volume day, rallying off this level. I wanted to just follow up and show you what I was seeing and how these lines, I think, can represent and do a really good job of representing where the next likely support level is going to show up. So once we break one time frame, then we look to the next. As long as we stay above this 18-month line, then this quarterly line won't come into play. So let's go ahead and get into the actual markets again. I'll start with the spider, and I want to show you this in the actual 18-month line. You see how we had been stretched away from this line, moved away from it for a couple of years just about, and it was just very likely, based on the weekly momentum, which I'll show you in a second, and based on the increase in volatility going into the end of the year, that we wanted to come back down and test this line. Now, we have bounced off this line, and what I was saying last week is that that is the operative target for a short trade. Okay, I would have used that and used that as a target to take advantage of this drop after getting short using the weakness of the ADX. The strength of the negative ADX on the daily chart, and then the rollover pattern, kind of a topping pattern on the hourly chart with strong ADX as well. And you get in, you get short if you play that, recognizing that there's a lot of volatility, but that was basically the concept here. So I would view that as a target. Now, with that said, does that mean that I go in and dive in and buy this low? No, I do not do that. Okay. And yes, missed a pretty good day here potentially, but is it the beginning of a trend? And I don't know the answer to that yet. I mean, it's possible. It is possible that that is what's taking place. We just broke the downtrend line right here. So that's the one in a 1, 2, 3 change in trend. The other thing that we did is we undercut this low, and I'm down on the hourly chart. I'm doing it pretty quick because let's get down to the nitty gritty here. We're breaking this downtrend line after a gap down and a reversal back up through this prior low. So we have the potential for an undercut and rally pattern. What we're going to need to see is a retest of this area around 420 is most likely going to be pretty key. If we can come back and hold that, I would view that as sort of an encouraging sign if we can hold and turn up. Now, if any of you follow William O'Neill or Investor's Business Daily or anything like that, I mean, he wrote a book years ago, William O'Neill did, talks about follow-through days. I've always used that as in the way that I look at the hourly chart, because essentially the three, when you get a three on a 1, 2, 3 change in trend, it tends to be, the likelihood is, if you think about what he says, it takes place in any day from day 4 through day 7. A lot of times you're going to get a rally up and maybe a little follow through, and then you check back or consolidate over the next few days. And then as you come back up through here, that's basically your confirmation day. And so I want you to use that, use these lines to help you determine that, but also recognize we do have an undercut pattern and a rally developing. The one thing that bothers me a little bit is I would have liked to have seen a little bit better green DI, but we have to recognize that the ADX, when volatility explodes, and we still have very high high volatility right now, the ADX is going to lag. Now, MACD has crossed the signal line, so that could set up for a little pinch at the 18 or move back down, back towards this undercut area, which is around 420, and maybe the MACD holds during that pullback. And if that takes place, then we have something that is a little bit more legitimate from my eyes than this one-day wonder rally. We could break the downtrend line and we could get ensuing selling tomorrow for all I know. But I have to say, I am somewhat impressed by the volume action. I mean, that's pretty solid volume throughout the day. The only real low bar was really in the middle of the day. Other than that, pretty strong volume action. So somewhat encouraged by that. I've been saying a lot of the same things in terms of the way this ADX was looking, and that we were prepared for a pullback to the 18-month line. Did I expect it to happen this week? Actually, I didn't. I thought it might take a few weeks to get down there, but it did it very quickly. And now notice also that the MACD line worked its way back down to 0. Okay, so that's not a small thing. I mean, it is important to recognize when this MACD has been really extended and it's taken a long time to get back there, this can act as a support level as well. So we got a couple of things. So, going into this week, maybe over the last few weeks, I've pretty much all negatives, like nothing but negatives out there. Now I'm starting to flip a few things over. I kind of like what's going on with the MACD. I like the successful test of the 18-month line. We do have the monthly MACD testing the signal line. So we have a little bit more time left to the month. So we'll have to see if that can hold. But going into this, I had said that I expected the 18-month, or at least it was in my head that I was sort of assuming that the 18-month might hold, simply because we had strong ADX on this monthly time frame. So I want to go down to the smaller time frames and time this. I don't just want to guess that it's going to hold. If you did that, good for you, but you're going to need to see confirmation out of this hourly chart. If we're turning for real, we should see some kind of a move like that now that we've broken the downtrend line. Let's go ahead and take a quick look at the QQQ, because this actually played out a little bit differently. It overran the 18, and I want to show you this on the monthly chart because there's a couple things to watch over the next few days. Notice how the MACD line is through the signal line, but we're not through the end of the month. If this keeps rallying off this bottom, it's possible that this will get back above the signal line by the end of the month. I mean, again, we only have a few days left, but we do have pretty good strength in the ADX still. So the fact that this is holding the area of this line, when these two lines are rising, it can be more of an area rather than in an exact level. So we are holding that. I guess what I am a little surprised about is the ferocious rally that has taken place in this area over the S&P or over the diamonds or whatever. But I think it's because we got so overdone. Some of these stocks are so overdone on the downside. They're so stretched to the downside that there's just a lot of short covering probably taking place. And there is some room to rally based on how extended it got. But the same thing holds true for the QQQ. We've broken the downtrend line. That's all we've done. We've done the 1 in a 1, 2, 3 change in trend. And I would still consider this an undercut and rally, even though it did have a little bit of follow through on that. So we want to look for this test of this low and see if we form a 2 there and turn back to the upside. So these are the types of things you got to be on the lookout for right now. I would just focus on the spiders and the QQQ right now. The volume action was pretty good. I think we have to respect that, but we're going to need to see, you know, what I would consider to be the follow through pattern, which is some kind of a test and then a turn up from there, which would agree with what O'Neill calls his follow through day. So let's be on the lookout for that over the next few days. Probably some part of the mid part of next week is when it should take place. But, you know, the way this market's acting, we could see some follow through before we see a pullback. So anyway, that's the update for the week. Go ahead and post any questions or comments. Thanks.